Here's the perfect example of why you would want to be on the alert service that's given out in pre-market before the opening bell, because it's all about those wholesale prices and no high frequency machine can do it. And so for the people that are really interested in making markets and getting wholesale bids, well, you're at the right place. On this 655 put on this Google trade, I'm going to put bids down here. We're going to open up in 14 minutes. I'm going to put the bid right at around $4.7 on the wholesale bid. Okay, they're marked at $9,500, 9.5 pennies right here on the close, marked down 5.4. Yesterday's high was 1750. Weekly options expiration bid gives you all the reason to learn how to steal that wholesale bid. And after all the years that we've been doing it, we do it live. No one else could show you that, but we do it before the market opens up. And what has to happen, Google has to run up, break above the 650 handle intraday, have about a $7 breakout, continue its breakout, make higher highs from yesterday, break those highs, drop these bids down here to these wholesale entries. And the 610 put, well, we put that out at $5.70 on an intraday level, knowing that Apple has to run straight up to that 603.50 by 605 handle to drop the prices down to our entry. Okay, and that's still in the price, the bid. Here's that 605 put. These close at last print 680. 1065 on the high. You can see it only had a $6 range, but if they run this thing straight up to that resistance level, as we would be going along the name, we're going to put a bid out here right now, now it's 605. Put the bid out here at $2.80 for now. Okay, and just remember though, that's that wholesale bid on a weekly options expiration, and the market opens in 13 minutes, 6:17 a.m. Pacific Standard Time, 3/23/2012. Not to mention, I'm throwing in that price line trade. Price line would have to run right up towards 718. My bid over here would be 470, and that too is a 3/23/2012, 720 what? Put option before the market opens. The thing that I want to emphasize, MMT, that is the lower market based on the criteria and based on these equities running up and making their intraday morning high very quickly and dropping the bid very quickly. You would only see it in a flash print and a high frequency volume flash print in the prices that would change the premiums and how they steal premium out of markets. Those are the best limit orders right now. Now, let's be honest. This is before the opening bell, and those are the best prices. We will make our adjustments accordingly. If they don't run that course, well, then we'll have to move our bids up to a higher bid that would still be wholesale. And then the trading ranges will get put in. Just remember one thing, that 655 put yesterday had a $10 range. And just remember the call side on it, the 640 calls, I'm going to give a bid on that in case this drops down to support like it did yesterday. They dropped it about $7.50, $8. Bam! On that opening bell, put this bid out here yesterday, $2.80. Put your bid out here right now in case they do drop it $8. Put your bid out at $1.70 right now on that 640 call, all on that opening bell. We'll make the adjustments as needed. Once again, weekly options expiration, weekly versus monthly options. We'll explain that later. We have a weekly option alert service at wholesale prices, and we have a monthly one.